NIO, they just announced their fourth quarter numbers and 2020, the whole year results as well. And they posted a bigger than expected loss and slowing EV sales in the first quarter. So NIO, they make the ES8 and ES6 electric sport utility vehicles, and they expect to deliver between 20,000 and 25,000 vehicles in the first quarter of 2021. So that's 15 to 18% up from the fourth quarter in 2020. However, this is a much slower growth rate than what they had seen all of last year. So 42%, it was expected that there would be 42% growth. Between the third and fourth quarter of 2020, there was a 42% growth rate. However, now they're only projecting a 15 to 18% growth rate. So it seems like they're growing at almost like half the rate of what they did previously. And this isn't good when you're a $65 billion company. Right now, NIO is a $68 billion company. The stock price is down around 13% on this day. When I was filming this video, it's down, all-time highs were around $65 a share. Now it's at $43 a share. But when you're a $65 billion company and generate only about $1 billion in sales, you have to make sure you're continuing to grow at a very, very rapid rate. So the company, they said they delivered 7,225 vehicles in January of 2021, and then their sales declined significantly to 5,578 vehicles in February. So they went from 7,200 to 5,500. Pretty big decrease, and that is not what investors want to see right now. They contributed this to flare-ups in the virus all around the world, some issues at the factory, but either way, investors don't care. If you're investing in a company that has a very high multiple, you need to see those consistent growth numbers, and you definitely don't want to see 1 month selling 2,000 vehicles less than the previous month, especially when you're only selling like 7,200 vehicles a month. So they said the first half of the year, they're giving pretty conservative numbers in terms of their guidance, but they expect demand to pick up in the second half of 2021. They expect to be back on track. I don't think they'll have much of an issue just because they are a Chinese-based company. They have a lot of good programs, such as their battery as a service model, where people can buy the vehicles without the battery and pay a subscription. So I don't think they have a lot to worry about long-term, but short-term, this did cause a lot of investors to worry. It could just be a great time to get into the stock now. It was at a price of around $65 a share. Now it's all the way down to the mid-40s. So if you're looking at this as a five-year investment, I don't think you could go wrong with investing in NIO. It's a Chinese-based company that's going to get a lot of support from the Chinese government to make sure it succeeds. Like, they're not going to let this company fail. And they have cars that people actually really, really like. And they really are like the second biggest electric vehicle company, like behind Tesla. They are really far behind Tesla, but in terms of delivery numbers, they did deliver over 40,000 vehicles last year. So, they are a pretty substantial company.